the Resilient Advisor Podcast. My name is Jay Coulter. Joining me for this episode is my friend Chris Versace. We're starting a new series called Tactical Market Strategies. We're going to try to keep this content very, very relevant to what's going on in the economy and markets today and this week. Chris, what's on your mind this morning?
Jay, I think I think the very big thing on everyone's mind is going to be the coronavirus, and it's how it's continuing to escalate over the weekend into today. Not only are we seeing more cases reported in China, more lockdowns in China, Hong Kong schools are being closed through February 17th or so. All this happening during the Lunar New Year. But I have to say, Jay, the bigger concern is the number of cases that are starting to pop up, not only in Europe, but in the US. And when you look at all of that, that is weighing on markets this morning. And it's going to be the focal point aside from earnings this week.
Yes, it's amazing shutting down the schools in a city as large as Hong Kong.
Well,
February 17th. That's amazing.
It's crazy. And remember, too, that it started in Wuhan and it has now expanded the shutdown to about 17 Chinese cities. So from what people are trying to figure out is how wide of a reach is this going to be, especially during the Lunar New Year, the biggest gift-giving holiday on the planet. What does that mean for consumer spending? What does it mean for luxury goods stocks, consumer stocks? And we're starting to hear companies kind of come out and warn or shut down operations, everything from Disney to Starbucks, but we'll I'm sure we're going to talk all about that.
Yeah, let's get into some specific stock implications. If you're watching this broadcast live and you want to ask Chris questions, jump on my Twitter handle at SJAYCOULTER. We'll answer questions. The first one we have is about Alibaba, Chris.
Well, if you think about what Alibaba is, it's effectively the Amazon of China. So, I think this one can go both ways. If we think about the slowdown potentially in spending, the inclination is that Alibaba shares are going to get hit. But again, it's the Amazon of China. So when we think about that, what do we do here at home? Put our feet up on the couch, we order, and stuff comes to us. We might actually see Alibaba be a beneficiary of the coronavirus because people are, again, cities are in lockdown, but people will still need things. I wouldn't be surprised to see Alibaba, when they report the March quarter, see a big pickup in January and early February.
It's already trended down towards its 50-day moving average. I like that idea, though, that folks are going to want to stay home, order and stuff, which could help. But there's such a large footprint over there in China. It could really go either way with it.
Oh, I think what we're going to say about a lot of stocks this morning as it relates to China is this. In the short term, just given the uncertainty, it's going to be shoot first, ask questions later, and we'll see these stocks come down. But we want to think through what are the implications of these, both in the short term, in the long term. So compare, contrast like an Alibaba that I think will actually see positive demand emerge as a result of the coronavirus. Compare that to, say, a Starbucks that is actually shutting its stores and shops in those certain provinces of China that are impacted, right? Then we think about Disney that is shutting down, or has shut down, I should say, Shanghai Disney in China and Hong Kong Disney. Then we start to take a look at some of the luxury good companies, everything from a Burberry to a Richemont, that have not only been seeing their Hong Kong sales hit because of these protests, but now that's going to really ratchet up because of what's going on in China with the coronavirus. So again, you really need to think it through. And you were to say, Jay, hey, Chris, are there any companies out there that could actually benefit from what's happening? And there are a couple. J&J, Johnson & Johnson's out this morning saying that they think they can develop a serum, a solution, if you will, for the coronavirus. But there are others out there, including Lakeland Industries, that manufactures protective gear and clothing. So again, like any situation that develops in the markets, the question that you want to strap on your stock detective hat is who benefits and who's going to get hurt.
So let me clarify. Johnson & Johnson has come out and said that they think they can find a way to solve this.
That's what they said this morning.
Huh. How about that? Let's keep it here in the United States. You reported in your note this morning, there have been potential cases reported in 20 states.
Right. So you're referring to the NASDAQ Daily Markets note that Tematica writes every day for NASDAQ. You can go to NASDAQ.com and see it. And correct. Over the weekend, the CDC not only said that we've got 5 cases now of coronavirus in the US, but they are examining some 60 individuals across 20 states, trying to figure out if there are more cases. Now, I would just caution folks that, I wouldn't be surprised if we see a lot of, or potentially see some jump the gun here, where there are cases that might look like it. They might have similar characteristics, but we really need to see what's happening. Even here in the state of Virginia, there were some reports that we might have seen a case develop. CDC hasn't said anything about that yet. So just be careful and track this. The other thing, Jay, is I think context here is really warranted. I don't want to incite anybody, say there's going to be an epidemic. So for context, we have so far 5 cases of the coronavirus. But in the US, if you look at the CDC data, on average, 35,000 people tend to die each year from the flu. So, hardly an epidemic yet here in the States.
All right, so let's talk about some of the stocks that could be negatively impacted here domestically, and then talk about some of the positive ones. What are your initial thoughts on who needs to be concerned this week?
Well, if you take a look at what's happening, right, in the shutdowns in China, the question becomes who has the impact over there. So we touched on Disney, we touched on Starbucks. Those are clearly 2 to watch for. Apple can be another one as well. They're going to report their earnings tomorrow night, Tuesday. So we'll want to be looking for what their guidance has to say. But other companies that people tend to associate over there, whether it's gaming, hotels, or travel, it's going to be companies like WYNN Resorts, MGM International. You're going to want to take a look at Las Vegas Sands as well. On terms of the airlines, easy group of names: American Airlines, United Airlines, really those that have pronounced international exposure. Other companies like a Southwest that doesn't have as much could get dragged down. Again, as we talked earlier, as these stocks start to reset, perhaps we see a buying opportunity in some of these less impacted ones as the coronavirus, if you'll again forgive the expression, as that dust starts to settle. And then as terms of beneficiaries, I think we talked about Lakeland, for example. There's a couple out there, I believe another APT, as well as some of the biotech companies that people think might have a solution here for the coronavirus.
So I just flipped up a couple of charts while you were going through those names. It was clear that WYNN and MGM were already under pressure before this happened. So that could create some buying opportunities, whether you're looking at technicals or valuations. Again, this isn't a recommendation to buy or sell. It's just the charts are interesting.
Right. And I would caution, if you look back on the time frame, remember that we've seen some impact in Hong Kong already. We've seen luxury sales, month over month tumble. We've seen negative data for the gaming industry in Hong Kong, which is again where you see a lot of these casino operations in Macau, whether it's WYNN, MGM, or Las Vegas Sands. So I would just say caution here in the near term, assess the downside and assess the potential impact. Hong Kong, protests, we're not really sure when that's going to happen. Coronavirus, not sure how much longer that's going to go. So I see that weighing on these stocks in the near term.
What about fast food restaurants?
That is an interesting question because we know that one of the growth metrics for fast food companies has been outside the U.S. as emerging markets in particular adopt the what we call the American lifestyle, or we jokingly inside of Thematica call that the fattening of the population. Companies you might want to watch out for would be Yum China, that is the former Yum operations, all based in China. But again, McDonald's has a sizable exposure over there, and again, take the lead from what we heard from Starbucks, that is closing their shops in infected areas and others to help prevent the further spread of the coronavirus. So yeah, there is going to be some downside there in these stock prices as people ask questions over what is the potential impact. And I think, Jay, that's why this week in particular is going to be crucial. We've got some 420 companies reporting earnings. I think about half of the Dow will be doing it, and about 140 or so S&P 500 companies, which means a lot of the companies with this type of exposure will be reporting. And we as investors will want to sit back and take stock of what they're saying, what's the potential downside to their business in that market, and then assess how much of that is, how much that those markets impact their revenues, sales, profits, and EPS to figure out, okay, what's potential downside? What's an overreaction? Where might I have a buying level?
One more sector, or I guess subsector to touch on would be the cruise ships. Got a chart of Royal Caribbean up. What are your thoughts on the impact there?
No, it's again, it's going to be the same where a lot of uncertainty. And if we look at, the folks that are traveling on cruises, from a demographic perspective, you're going to see a lot of older Americans traveling on cruises as they enjoy the twilight years. But increasingly, when we look to the emerging markets where disposable income has been rising, in keeping with our rise of the new middle class investing theme here at Tematica, we see that. So as those shoppers kind of are restricted or pull back, odds are we'll see some vulnerability in the cruise lines. Again, the big question is how long? Could it be weeks? Could it be months? We don't know yet.
Excellent. What else is on your mind and on the radar for you this week?
Well, let's talk with some high profile things. Later this week, we have the Federal Reserve that's going to have their January FOMC meeting. Expectations when we look at the Fed Watch tools that are out there really don't call for much of anything happening for the first half of the year. However, I would say given the outbreak of the coronavirus, we're going to want to hear what Chairman Powell thinks about this if the Fed stands ready to backstop the markets if need be. Again, here in the U.S., still very small, but that's what we're going to want to be hearing middle of the week. Later in the week, after that, we get the first print for GDP for the December quarter. And again, depending on the forecast you're looking at, 1.2, 1.8%. So we'll have to really dig into that. And then later in the week, we get some December data that we like, which is the personal income and spending data. Remember, the consumer powers directly, indirectly 2/3 of the U.S. economy. So we always want to pay attention to consumer-facing data. So that's the big data that we'll be looking for this week.
In your mind, is there any chance for an upside surprise to the GDP? Or downside?
Again, I would say it depends on what number you're using, right? If you're using 1.2%, the lower end of the bar, there probably is a good chance of that. If you're one of the higher ends, 2.1%, it's probably going to come in around there, maybe slightly slower. So, but again, for me, it's not the exact number per se. It's going to be the vector velocity that we have seen relative to the last couple quarters. Right. And whether or not now, as we start to get the January data, are we seeing orders improve because some of the uncertainty that we had in the fourth quarter started to fall by the wayside. And, that was uncertainty over Brexit. That was the U.S.-China trade deal and some other things. And, so we want to see, was the fourth quarter a little bit of a lull or I won't call it a bottom, but a lull. And are we starting to see the global economy accelerate into 2020?
With everything else going on, it's amazing that we've gone 12 minutes and I'm just bringing up the BRIEX deadline at the 34th. That would have been all we would talk about this week. Anything folks need to consider is that pretty much.
So I'm going to say two things. One, it is looking like this is going to happen. Is everything ironed out or all the details, firmed up and the like? I don't think so. I do think though you'll have a better shot for talking about that next Monday, Jay, with your other guest who will be on this program.
Yes. Anything else before we wrap up that you think listeners should be paying attention to?
I would just say, look, it's going to be a wild ride, probably one of the busiest earnings weeks that we're going to have. Sit back, collect your data points and triangulate. And all the data that you collect, how does it fit into your various investment theses, your investment mosaic? That's what we will be doing. Probably the highest profile name of the week, though, is going to be Apple, and they report Tuesday night, as I mentioned earlier.
Excellent. Chris, I appreciate you coming on. Next Monday, I'll have your partner from Tematica Research, Lenore Hawkins, on. I appreciate you spending the time.
Right back at you, and I'll see you here in 2 weeks, Jay.
Thank you.